We gave you a slice and flavor of the mutual fund industry. Now let's shift to what's happening with retail participation in direct equities. And who better than Angel Broking as well as ZERODHA to give us a flavor of the same. Nitin Kamath as well as Vijay Agrawal joining on the show right now. Gentlemen, morning. Good to have you on the show. Nitin, we've been chatting quite a fair bit. Since post-COVID, retail participation clearly has come back to the market. There's a new cult and tribe which has gotten created of hobby traders / Robinhood traders, whatever you may want to call them, work-from-home traders. But do you sense that this trend is here to stay? What are the September data and indicators telling you?
Yeah, I mean, I'd be lying if I say I'm not surprised that that it's still continuing. We're still adding as many customers as we were adding, say, in April, May, June. So, my expectation was that once the market kind of flattens down, maybe the interest drops, but that hasn't happened yet. So we're still adding a lot of first-time investors to the market.
Been your understanding of how the kind of trends are picking up, and is there any data to tell what kind of investors are actually coming in afresh into the market? Is it any specific age group? Are newbies as well entering into the market? Is there a separate set of millennials which are now opening accounts with you all?
No, see, right from Feb, March of this year, the 70-75% of the audience is less than 30 years of age. So yeah, you can call it millennial investors. I think the reason here is also because people who invest using a certain broker are very sticky. So I think a lot of older folks probably already had demat accounts, trading accounts. So instinctively they go back to, if they want to trade or invest, they go back to trading with whom they had accounts from before. So all the new folks, so most of the addition that's happened this year has been, at least for us, it's been the 20 to 30-year-old. And also, the other bit here is that 60% of them haven't done any kind of investments in their life. So we are their first vehicle. So they haven't even done mutual fund investments before. So they're opening an account with us to kind of invest in stocks and also do mutual funds.
Vijay, what's been your reading? Are tier 2, tier 3 cities as well participating, or the work-from-home trader is an urban trader?
Right. So the thing is...
Vijay, my question was to you. Nitin, I'm just going to come to you. I'm going to come to Vijay Agrawal from Angel Broking. Vijay, that question was for you.
Hi, sorry, I'm Vinay Agrawal. I think you got my name wrong. I'm Vinay Agrawal. So what we are seeing is a lot of customers are actually coming from tier 3 and tier 2 cities. As Nitin highlighted, bulk of them are young age, 30 years of age, and they're first time getting into equity markets, whether it's direct equity or from mutual funds. So we are seeing a huge flow of customers are actually coming from tier 3 cities.
All right, fair enough. Nitin, in terms of your last interaction, you told us Bangalore, Pune, Hyderabad, that was really the target audience as well, more tech-driven cities. What are some of the other regions that you're finding traction in, that you're feeling confident of, and where you're seeing growth?
See, the thing is, I think one of the issues with the industry is we track users by address proofs, right? So if I've given an address proof that belongs to, say, Shimoga, and I am, say, in Bangalore, most of the industry now goes and tracks saying the user is from Shimoga, so maybe the user growth is happening from a tier 2 or tier 3 city. So I think one of the things that we have started doing is also to start tracking people by the IP address. I think it gives a lot more intelligent kind of information, because the behavior of a lot of 20 to 30-year-olds is that a lot of these folks move from smaller cities and towns to cities. Large cities for jobs. But when they move, they don't really change their address proof on Aadhaar and etc. Because of which data might be a little skewed if you look them up only by address proof. So what we are seeing with us is concentration is still the top 20 cities. If I were to see by IP address, right? And it's still the same, Pune, Hyderabad, Bangalore, Bombay, still the large cities which contribute meat of the business in us.
Okay, fair enough. And in terms of the competition also that's increasing now, within the online space, within the tech-driven space, what's your sense? I mean, how do you plan to kind of strategize, maintain market share, or grow it at a time like this?
See, the thing is, I think it's become a product play of sorts, so it's a better product is going to attract more customers to it. Because what has happened is, I think, SEBI over the last 1 year, last few years, has been, slowly and steadily making all these changes. So there aren't any regulatory arbitrages of sort available today. So all brokers, can, going forward, for example, offer the same intraday leverages. The onboarding is, they're talking about, exactly the same type of onboarding with everyone. So essentially, everything apart from the product will eventually become the same across all brokers in the country. So what it means is the broker who has a better product, better platforms, better initiatives, is probably going to stay ahead. And I'm sure Vinay is working on it. We are working on it. So 24/7, the chase right now is to keep improving the product.
Okay. Vinay, let me get more perspective from you as well on the digital model, how you feel that's evolving, and in terms of, sort of how things are evolving and innovating at a really rapid pace. So given that, what are the future trends that you're anticipating and how you're actually staying ahead of it all?
Yeah, so what we are seeing is, if you look at the way the industry is growing, if you look at the previous 3 years, the industry was adding close to 40-50 lakhs accounts a year. Now the current run rate shows, people are doing maybe 1.2 crores a year. So, the industry has clearly seen a 3 times growth in terms of the run rate that we are seeing. Also, if you look at the industry activity ratio, which is the NSE active clients divided by total demat accounts, that has also moved from more around 25-26% now close to 29-30%. So what we are seeing is more influx of customers are coming at a high speed, and we are also seeing higher activity from the existing customers. So what we believe is, and then if you see, the bulk of these customers are coming to more digital broking houses, because that's how, I agree to what Nitin was highlighting, that most of the broking houses are looking at customers from the addresses that they have registered. But we also did a little more dipstick study, and we found that even the IP address does not give the right statistic, because most of that time, those IP addresses that are captured are not from the real IP addresses of the origin, but it's from the NOC, or from some place where the telecommunication company has set up their data center. So, but when we checked it physically, we found still a lot of customers are coming from those small cities and towns. And we believe that this trend will continue for 3 primary reasons. The first reason was, if you look at, the small cities and town, there was no physical branch offices of broking houses, so that, they can get those customers on board. Now that is gone because of digital. The second reason is, if you look at these tier 3 cities and towns, you'll find that most of these people will believe people in Mumbai, Delhi, or tier 1 cities are far more informed, knowledgeable, they have more data, more information, and that's why they can play into the stock market better than them, But that has changed, with all this high-speed mobile internet, 4G connection, and smartphone. I think, the tier 3 guys is also as informed as a tier 1 guy. And the third thing was, you look at, the way the alternative investments were giving returns. So for example, you make an FD, let's say 2 years back, you may get 6-7% rate, the property investments were also looking more lucrative. Now that is gone. You get interest rate of 4-5%. So what I believe is, over a period of time, we'll see increased participation from this young millennials, who are the large working population today in India, and bulk of them will keep coming to the market, and we believe that this healthy momentum may continue for a long time.
All right. Thank you, gentlemen, for joining us this morning. As always, great chatting with you and getting a check on how the trend's shaping up.